Few names carry more weight in the investment world than Warren Buffett's. Buffett, often known as the Oracle of Omaha, has transformed modest funds into large fortunes through his investment ideas. As we look ahead to 2024, many investors are wondering, how can we apply Buffett's wisdom to multiply our own savings? Do watch till the end, as you won't want to miss any steps to multiply your money. Before we dive in, I want to remind you to hit that like button and subscribe if you haven't already. It really helps my channel grow, and I appreciate your support. Without further ado, let's get started. Step 1. Embrace the power of knowledge. Warren Buffett once said, "The most important investment you can make is in yourself." Before diving into any investment, it's crucial to educate yourself about the financial markets, economic trends, and investment strategies. Buffett himself is known for his voracious reading habit, often spending up to 80% of his day absorbing information. Start by immersing yourself in financial literature, attending investment seminars, or even taking online courses. The more you understand about how money works, the better equipped you'll be to make informed decisions with your $1,000. How might dedicating time to financial education change your perspective on money and investment opportunities? Step 2. Identify undervalued assets. One of Buffett's key strategies is to look for undervalued assets, companies or investments that are trading below their intrinsic value. This approach, known as value investing, requires patience and a keen eye for detail. In 2024, this might mean looking beyond the flashy tech stocks and exploring sectors that others are overlooking. For instance, Buffett has shown interest in energy companies and banks in recent years. With your $1,000, you could start researching companies in these sectors or others that seem underappreciated by the market. Remember Buffett's words, "Price is what you pay, value is what you get." Look for companies with strong fundamentals, consistent cash flows, and a durable competitive advantage, what Buffett calls a moat. Step 3. Diversify but don't dilute. While diversification is important, Buffett warns against over-diversification. He famously said, "Diversification is protection against ignorance." It makes little sense if you know what you are doing. With $1,000, you might be tempted to spread your investment across numerous stocks or funds. However, Buffett's approach suggests focusing on a handful of well-researched investments rather than casting too wide a net. Consider investing in a low-cost index fund that tracks the S&P 500. A strategy Buffett has often recommended for individual investors. This approach provides diversification across 500 of America's largest companies while keeping costs low. How can you strike a balance between diversification and focused investing with a limited capital of $1,000? Step 4. Leverage compound interest. Albert Einstein allegedly called compound interest the eighth wonder of the world, and Buffett's success is a testament to its power. By reinvesting dividends and allowing your investments to grow over time, you can potentially multiply your initial $1,000 many times over. Consider this. If you invest $1,000 in an asset that returns 10% annually, close to the historical average of the S&P 500, and you reinvest all returns, after 30 years your investment could grow to over $17,000, all without adding a single extra dollar. Buffett's holding company Berkshire Hathaway has leveraged this principle to achieve an average annual return of 20% since 1965. While such returns are exceptional, they illustrate the potential of patient long-term investing. Step 5. Stay patient and think long-term. Perhaps the most crucial step in multiplying your $1,000 is to adopt Buffett's long-term perspective. As he famously quipped, "The stock market is a device for transferring money from the impatient to the patient." In 2024, with economic uncertainties and market volatility, it might be tempting to frequently buy and sell in an attempt to time the market. However, Buffett's success comes from holding on to quality investments for decades, not days or months. Set realistic expectations for your $1,000 investment. While it won't make you rich overnight, with patience and consistent application of these principles, it could grow significantly over time. How might adopting a long-term perspective change your investment decisions and emotional responses to market fluctuations? Navigating economic headwinds. As we look ahead to 2024, it's important to consider the economic challenges that Buffett has been warning about. He's expressed concerns about the massive U.S. debt, which reached $1.4 trillion in just the first 9 months of fiscal year 2023. Buffett has cautioned about potential bubbles, particularly in the real estate market. He noted, "You're likely to see the greatest fall-off where you've had the biggest bubble, and they tend to be in the high-end market where people have bought for investment or speculation rather than use." In light of these warnings, how can you protect and grow your $1,000 investment? Consider Buffett's advice to be fearful when others are greedy, and greedy when others are fearful. This might mean looking for opportunities in sectors that others are overlooking, or that have been hit hard by economic fears. In an economic environment of high debt and potential bubbles, What sectors or investment strategies might offer the best opportunities for growth while managing risk? The non-recourse debt factor. Buffett has highlighted the risks associated with non-recourse debt, particularly in the real estate market. This type of debt allows borrowers to walk away from their obligations by surrendering the property, potentially leading to a cascade of defaults and falling property values. While $1,000 might not be enough to invest directly in real estate, understanding these market dynamics can inform your investment decisions. For instance, you might consider investing in REITs, real estate investment trusts, that focus on more stable sectors of the real estate market. The ripple effect on small banks and businesses. The potential economic downturn Buffett warns about could have significant implications for small regional banks and businesses. Loan approval rates for small businesses have already dropped by 10–15% in some areas. This situation presents both risks and opportunities for your $1,000 investment. On one hand, it might make you wary of investing in small regional banks or businesses that rely heavily on credit. On the other hand, it could create opportunities to invest in well-managed small businesses or community banks that are undervalued due to broader market fears. How might the challenges facing small banks and businesses influence your investment strategy, particularly when working with a limited capital of $1,000? The stock market tremors. Major companies like Tesla, Alphabet, and Nvidia have seen significant drops in their stock prices, potentially signaling broader market troubles. However, Buffett's approach teaches us not to panic during market downturns. In fact, he sees them as opportunities, famously stating, "Be greedy when others are fearful." With your $1,000, this might mean looking for solid companies whose stock prices have been dragged down by overall market sentiment rather than fundamental issues with the business. Always remember Buffett's wisdom. Price is what you pay, value is what you get. Buffett's unwavering investment philosophy. Despite his warnings about potential economic troubles, Buffett's core investment philosophy remains unchanged. He emphasizes that predicting recessions is futile, stating, "I can't predict recessions. If you guaranteed me there would be a recession next year, I would be buying and selling the same securities I'm buying and selling today." This steadfast approach underscores a crucial point for your $1,000 investment. Focus on the fundamentals of what you're investing in, rather than trying to time the market or predict economic shifts. How can you apply Buffett's consistent investment philosophy to your own strategy, especially when faced with conflicting economic indicators and market volatility? Preparing for 2024, a Buffett-inspired strategy. As we prepare to multiply our $1,000 in 2024, let's recap the key strategies inspired by Warren Buffett. 1. Continuously educate yourself about finance and investing. 2. Look for undervalued assets with strong fundamentals. 3. Diversify smartly without diluting your investments. 4. Harness the power of compound interest through patient, long-term investing. 5. Stay calm during market volatility and see downturns as potential opportunities. Remember, while $1,000 might seem like a small sum, it's not about the amount you start with, but how you invest and grow it over time. As Buffett himself started with modest means and built an empire, your journey to financial growth begins with these first steps. The road ahead. As we navigate the uncertain economic waters of 2024, keep in mind that every crisis also presents opportunities. Buffett's success is not just about his investment acumen, but also his ability to remain calm and rational in the face of market turmoil. Your $1,000 investment, managed wisely and patiently, could be the seed that grows into a substantial nest egg. By applying Buffett's principles of value investing, long-term thinking, and continuous learning, you're not just investing money, you're investing in your financial future. As you embark on your investment journey with $1,000, how will you measure success? Will it be purely in financial terms, or will you also consider the knowledge gained and the discipline developed along the way? What specific actions will you take in the next week, month, and year to apply these Buffett-inspired principles to your investment strategy? Comment below. Remember, the path to financial growth is a marathon, not a sprint. Stay curious, stay patient, and most importantly, stay committed to your long-term financial goals. Who knows? Your $1,000 investment in 2024 might be the beginning of your own Buffett-like success story. You may also wish to check out my other video on how to earn dividend income from a 10K investment in the link above and in the description down below. If you enjoyed this video, do like and share this video so that more people will learn how to multiply $1,000 in 2024. Check out this playlist of my top 10 videos for creating wealth, and I'll see you in the next video. Take care.